You know, you can't avoid hearing all the negative things that are happening in the economy right now. We have runaway inflation, skyrocketing interest rates, supply chain roadblocks, and a war in Europe. Hearing about all this all day long, every single day, creates a lot of fear about what might happen next. Now, in response, consumers are pulling back. Their 401k balances are down, so they don't feel as rich and secure as they used to. In their minds, the uncertainty of how bad things can get means that it's probably a good idea to hold on to cash and wait until things improve. Now, consumer sentiment will determine what ultimately happens in the economy, but I would argue that an investor should have the complete opposite mindset. Think about it. If you want to buy a rental house, when do you think you're going to get a better deal? When everybody in the country is actively trying to buy a house? Or when demand is falling and sellers are more likely to do panic price adjustments because nobody knows what true market value is anymore? Now, I understand that rising home prices in the Austin area have made it more difficult for investors. But do you really think this means there are no more opportunities? Or that it's no longer possible to make money in Austin real estate? I would argue that since the market is shifting, it requires a shift in your mindset and a shift in your strategies. And if you're not willing to do that, you might miss out on opportunities that are right there in front of you. Stick around for this video and I'll tell you all about it. Anybody can get started in real estate investing as long as they have money and/or credit to buy properties. Now, of course, just because you're able to buy an investment property doesn't guarantee you will make good investment decisions. And of course, since the cost of buying real estate is relatively high, it makes sense to get some training before you dive in. This is the primary reason why real estate investing classes have become so popular. The idea is that if someone else has been successful at it, they can teach you to do the same things they did. This will enable you to minimize your risk and increase your chances of succeeding. Now, this makes perfect sense. And I agree that if you work with someone who has been successful, the more you hang around with them, the more likely you are to pick up on how they think. That is probably the most valuable thing you can learn from a coach or mentor. The problem with this model is that whatever strategies that guru used to build their real estate empire are probably no longer applicable in the current market. Let me give you an example. One of the first things you're going to be taught about rental properties is what's called the rental factor. It goes like this. The amount of rent you get for a property should be greater than or equal to 1% of the market value of the property. A $200,000 house should rent for $2,000. A $300,000 house should rent for $3,000, etc. Now, there may have been a time, and there might still be markets where this 1% rule still exists, but rental properties in the Austin Metro haven't been close to this percentage in years. But let's say someone dumped their rule book and bought a house in the Austin Metro for $300,000 3 years ago and was only able to get $1,600 a month in rent. That's half of what the training says the rental factor should be, but they did it anyway. Over those 3 years, because of the pandemic housing boom, that house increased in value and is now worth $600,000. Now remember, their return is not calculated on the initial value of the house. It's calculated on the amount of money they invested. So let's say they put $100,000 down and finance $200,000. This doesn't include taxes and insurance, but at a 4% interest rate, that would have been a $955 a month payment. And they got $1,600 in gross rent. So they had positive cash flow, in addition to a 300% return on their initial $100,000 investment. Now, I know this is an example, but there are plenty of investors out there who have seen returns like this if they bought before the price run-ups. But they only would have achieved this kind of return if they modified the rules that they were taught. Let's talk about cash flow real quick because it comes up a lot. This is another thing that's taught in the real estate investing classes. You should never buy a rental property unless it cash flows. Makes sense, but how do you determine the cash flow? You see, residential rental investors are the only ones out there who include the cost of financing in the equation. The idea is that the rent payment should be high enough to cover the mortgage payment. But the more money you put down, the lower the mortgage payment, which means the cash flow increases. On the far end of the spectrum, if you paid cash for the house, there would be no mortgage payment. Your only expenses would be taxes and insurance, which truly are your only fixed costs. The mortgage payment is variable, and I would argue should not be included in your equations when you're analyzing a rental property. The final thing I want to talk about are the higher property values that are now the norm in the Austin Metro. This will impact your property taxes because you're not going to be able to homestead a rental property. In Texas, if the house is your primary residence, you can file a homestead exemption. This will give you a slight decrease in the assessed value, and your year-over-year tax increase is capped at 10%. Using that example from earlier, if you had been paying taxes on a $300,000 assessed value, but it increased to $600,000, if that house was homesteaded, the most the value could increase is 10% of the previous value, in this case, $30,000. But if it's a rental property, there is no limit to how much or how fast the assessed value can be increased. Now, the other part of the equation is the tax rate, which likely will be adjusted this year because every property saw a huge increase in assessed value. Regardless of how that all works out, it is safe to say that property taxes will increase. It's just a question of how much. Now, as a landlord, this will increase your fixed costs and will make it more difficult to get to positive cash flow. Now, the other side of this, though, is that it creates an opportunity to begin to ask questions like, how can I increase rental income? And I'm not talking about raising the rent on the current tenant. Let's say you have a house that's valued at $600,000, and you can get $3,000 a month with a 12-month lease. Now, if you're good with that, fine. But what if you could increase the gross rent to $6,000, $8,000, or $10,000 per month? Now, you'll never be able to do that renting to a single family. But what about short-term rentals? Airbnb or vacation rentals are rented for shorter periods. And depending upon your location, you could double or triple the gross monthly rent by renting by the week. Another option is residential assisted living, with some slight modifications of the bedrooms and the bathrooms, and you probably would need to hire a caretaker. But remember, you're not going to be providing medical services. But if you could make those adjustments, you could substantially increase the gross monthly rent for the property. Now, if that sounds too complicated for you, what about something as simple as renting by the room? Did you know Austin is now the #1 city for Gen Z, which are the recent college graduates just starting their careers? What would it look like to create a dorm-like experience for these young professionals? They have good jobs, and if they valued the idea of that community living, they'd be willing to pay a premium for it. Median rent for a one-bedroom apartment in the metro is about $1,500 right now. If you have a 4-bedroom house and could get close to that same rent, you'd be looking at a gross monthly rent of $6,000. The point I'm trying to make is that if you want to be successful at real estate investing in the Austin area, in this shifting market, it's going to require that you start thinking outside of old models. But that's only if you're willing to make the adjustments to succeed in a shifting market. I get emails, texts, and phone calls almost every day from people who think about buying or selling real estate here in the Austin area, and I would love to help you out too. If you like this video, you should check out this other one that I did. And don't forget to subscribe to my channel and hit that notification bell. All of my contact information is in the video description, so don't be shy. Let's make your real estate dreams come true.